Gold and copper traded at a fresh all-time high on Monday. Silver soared. Equities in Europe and the US fluctuated near their all-time high levels as well. And Nvidia gained after Barclays lifted its price target ahead of Wednesday's earnings announcement. So welcome. This is Swissquote's Daily Market Talk. So the week kicked off with quite a solid risk appetite, really, especially for commodities. Gold advanced to a fresh record and traded at $24.50 per ounce level yesterday, and that despite a further rebound in the US yields after more Federal Reserve members came out and voiced their preference for keeping the interest rates high for longer. So Loretta Master from the Fed, for example, said that she no longer sees 3 rate cuts appropriate. No, really. Then Vice Chair Michael Barr insisted that the current interest rates need more time to bring inflation down to the 2% policy target. Then Murray Daly isn't confident that inflation will ease sustainably. And finally, Philip Jefferson poured more cold water on last week's post-CPI optimism in the US, saying that while the data was encouraging, sure, but cooling is slower than he'd like. Now back to the gold story. Higher US yields increase the opportunity cost of holding the non-interest bearing gold and is not necessarily supportive of gold prices. But on the other hand, there is this broad-based and finally growing worry that high for longer interest rates in the US will increase the debt burden on the US government's shoulder and make the American debt and the interest payments, especially the interest payments on this debt, unsustainable in the future. And a chart from Peter Peterson Foundation predicts how the rise in net interest payments in the US will accelerate in the next decade, and it's quite scary. And the letter is obviously positive for safe haven appetite for gold, as the one for US Treasuries is easing. Now, there is also the robust central bank buying for gold, remember, because the central banks reportedly tripled their gold holdings since Russia invaded Ukraine a couple of years ago. And as a result, US blocked the Russian central bank's US holdings, remember. Then the geopolitical tensions around the world remain relatively high with the ongoing war in Ukraine and in the Middle East. While tensions between China and the West remain relatively high as well. China, on the other hand, remains a serious threat in the South China Sea, and Taiwan feels the heat every single day. And the cherry on top of all this, the uncertainty spurred by the death of the Iranian president last weekend added to the present positive dynamics for gold prices on Monday's trading session. And for those who actually wonder whether the gold rally could extend further from the actual levels, the answer is yes, it could, ladies and gentlemen, because trend and momentum indicators remain supportive of a further rise in gold prices. The RSI index doesn't necessarily warn of overbought conditions just yet, and the $2,500 per ounce psychological mark is probably the next natural target for the gold bulls against the US dollar. And gold should extend gains against other currencies as well around the world. But not against silver, mind you, because the gold-silver ratio, also called the mint ratio, tanked to the lowest level since January 2022 as gains in silver outpaced gains in gold. In fact, silver gained more than 20% against gold since the beginning of this year because, silver is a precious metal that's also used in industries, thus benefiting grandly from the so-called reflation trade at the moment. And silver is also used in clean energy, mind you, like solar panels that everyone is rushing to these days. So if you think that gold is overpriced at the current levels after after the recent rally that we saw over the past couple of months, well, silver is an interesting option. Value-wise, while the mint ratio has historically fluctuated within the 60 to 80 range, and since 2021, well, it settled sustainably above this historical range. Now it is back within this range, but silver has further room to gain against the yellow metal if the reflation narrative remains a major driver of prices, and while the gold-silver ratio could easily retreat toward the 68 level. That's the level that's considered as being the long-term historical average for this mint ratio. Now, speaking of the reflation trade, well, copper futures also refreshed a record on Monday's trading session. The widening gap between solidly growing demand for the red metal and the sluggish global supply support the price rally in copper prices, while the reflation trade further boosts this demand outlook, obviously, so that's all positive for copper futures. Interestingly, crude oil finds it hard to clear a major resistance near the $80 per barrel level. That's a level that shelters the 200-day moving average and the major 38.2% Fibonacci retracement on year-to-date rally for the U.S. crude, while the Middle East tensions rebound in Chinese industrial production as a result of the Chinese government stimulus. This reflation trade that's supported by these prospects of central banks cutting the interest rates later this year and OPEC's determination to restrict their output remain supportive factors for oil prices, yet the record U.S. production and comfortable spare capacity from OPEC are pointed as factors that actually prevent oil bulls from confidently buying oil above the $80 per barrel level. Now, another limit to oil appetite is, well, the fact that rising oil is inflationary, and a strong bounce in oil prices quickly revives the central bank hawks around the world and tempers this reflation trade. So all in all, oil could extend gains above that $80 per barrel level, but the rise should be soft and slow. A rise toward the 50-day moving average near the $82 per barrel level is plausible, but again, the rise should be nice and slow. Elsewhere, well, nat gas prices are finally picking up the momentum that many were waiting for months, so just enjoy this ride. Now, of course, the commodity rally is also a boon for the mining stocks, and the British FTSE 100 index has plenty of them in its pocket. So, no wonder the FTSE 100 index remains upbeat these days near all-time high levels. So, the British Blue Chip Index is well positioned to benefit further from this unfolding reflation narrative, especially if we see sterling retrace gains in the coming weeks, which I think is a growing possibility if tomorrow's British inflation print satisfies the Bank of England dose. Now, yesterday, the BOE's broadband said that the policy in the UK will have to become less restrictive at some point in time, and that cemented the possibility of a rate cut in summer in the UK. Cable advanced past the 1.27 level, but has a limited upside potential into the 1.28 level, provided the softening Bank of England expectations. And on the corporate side, well, it is said that BHP is now preparing for another offer for Anglo American, and City AM says that, well, top Anglo American investors could finally be open to simpler BHP takeover. So note that BHP shares gained another 1.5% yesterday on that hope, and well, we will be watching this story unfold this week. Elsewhere, Nasdaq 100 advanced to a fresh all-time high level yesterday as Nvidia rallied 2.5% after Barclays lifted its price target from $850 to $1,100 per share, saying that it now sees more revenue upside to current estimates. Now, Nvidia will be revealing its latest quarterly results tomorrow after the bell, and well, obviously cannot afford to drop the ball, because even Morgan Stanley's Michael Wilson, who is known to be a determined bear these days, well, threw in the towel and turned bullish on the S&P 500. In a sense, he revised his target from 4,500 to 5,400 for this year, and actually kind of worries me the most, because I think to myself that if the S&P 500 really stretched to a level to convince Michael Wilson to turn bullish, well, it is maybe, but just maybe, time to sell. So this is all for today. I'm İpek Özkardeşkaya and thank you for joining me and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions and your questions below as usual. Follow us on Instagram, on X and on LinkedIn for regular market updates. Subscribe to our YouTube channel for daily market comments and please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow and until then, good day trading.